All right, what is going on, Discord family, and welcome back to another edition of Market Review with me, T. Hobbs. Today is Tuesday, February 25th, 2025, year of our Lord, and man, the markets were on fire today. You can see that there's been a lot of positioning in preparation for the big day tomorrow. You guys don't know, just a quick reminder, tomorrow is NVIDIA earnings after hours, and I guarantee fireworks out of this market, right? There will be fireworks. It's up to you to decide which side of those fireworks you want to be on. You want to be the person riding the rocket, or you gonna be the person catching the fucking flames? So it's up to you. But today we'll be reviewing the Dow Jones, the S&P 500, and gold. I'm gonna leave NASDAQ out of today's review session just because it looked just like the S&P 500. But I definitely want to fit the gold. I want to start fitting gold inside of the market review. So without further ado, let's go right into my plan on the Dow Jones, and I'll tell you I'll show you guys kind of the trades that I took on the day and stuff like that. So current conditions, we were in a bullish retrace of a bearish trend. So I was very bullish this morning. If you read my plan, bearish below 44,330, which we stayed below. We were bullish as long as we stayed above 338. And we definitely stayed above 388, right? So we swept below it, and as soon as we swept below it, we ended up finding buyers. But anyway, bears continue to apply pressure to the lows, but now bulls appear to be building strength at key 4-hour demand, right? This is a 4-hour, but it used to be a daily demand, right? We are in major discount. So regardless of the bearish activity, I am looking for longs, right? So we had our range from 43,777 through 43,694, our lows from 43,534 to 43,421. And then we had our bullish plan here. Look for buyers to defend 43,462 to 43,292. And we can look to long the market targeting the top of the range. I want you to remember this plan because this is where I effed up and traded outside of my plan. And every time I trade outside of my plan, something bad happens. Nothing bad happened today, but it could have. And I'm going to go over that when we get down to price action. I also had an extreme plan down here at the CPI candle. That one never got triggered. And then I had a bearish plan up here at this 4-hour resistance, which it looks like the market's saving that for tomorrow maybe. But we're definitely going to come back up here and retest this weekly and this red line here and then this 4-hour resistance at some point, right? So I'll keep those plans for tomorrow, and then we'll see how everything goes. So let's take off this pre-market plan and then let's kind of walk through how price was delivered today. I'll share you guys some of the trades that I took, and then we'll move over to the S&P 500. All right, dropping down to the 15-minute chart this morning. We'll go down to the 5-minute actually. Yeah, 5-minute. So yesterday, if you guys remember on the review, I talked about these doji candles at the lows or the highs, right? These news candles come out, right? Like we get these huge wick candles right at 6 o'clock. We got this exact same candle yesterday at the high, and I told you guys anything above that wick I was looking to get short. Today we got the doji candle at the low, and I was like, okay, I mean, let's make it easy for me. If you sweep the previous day low, I'm gonna get long. The market swept the previous day low, right? And if we come down to the 1 minute and get a little bit closer to price, I'll show you guys why I entered. And I was a little late because I was actually playing a video game on my phone, but you know, it's neither here nor there, right? But 550, 610 macro is all I'd be waiting on, right? I just be sitting here waiting. I come to the computer at like 5:45 just to avoid the temptation of trading before we get to 550, because something always happens inside of 550. I just gotta be patient and wait, right? So we got the doji candle, we got the sell down candle, and low key I should have been long in the 300s. But again, I was playing video games on my phone, okay? So don't at me, right? So then when I looked up, this candle had printed 602 candle. So I ended up getting long 43,433. Stops were below 43,385, right? So I'm getting really good at kind of just waiting on that next sell candle to come down inside of that instead of chasing. Because a lot of times I'll end up getting the entry like at 454 or something like that. So I'm getting really good at that. So I ended up, my target on this trade, if you look in the shop trade ideas, was 43,777. Okay. I know a lot of people were going to laugh when I say this, but once again, I did not hold to my profit target, but I do like the way I managed this, right? So From 43,433 up to about 633. I ended up I was in 10 micros. I took 7 of them off up here. We were struggling for 200 points. And then I was like, okay, I'm going to keep the 3 runners on because I really want to go to my target of 777. And like, I don't know what it is, but the way this thing comes down inside of 920 just freaked me the F out. And I was like, and F it, I'm going to lock in at 150 points on the runner, which technically I lost 50 points. As soon as I locked it in, the market swept me out, of course, and then it went straight to my profit target. So that was all good. You know, still made money on the day. But again, I'm trying to get better at holding through New York. Okay, so here's where things went off the scale of my pre-market plan. And although this was a good trade set up, I think I would have been better off just passing on the trade, right? So one thing that I always tell myself, I got my chessboard high, my chessboard low. Don't dibble in the middle. But we were trading down into 950 and I saw this price coming back into this area. And I was like, you know what? I don't normally do this, but go ahead, keep the water going, right? So I got long 43,581, right? And I was like, oh, this is going all the way back up. So of course, you know, when I was up 70 fucking points up here, I took no profit, right? Let this candle dump on me, go back up there and retest. And then I was like, oh, if we fail this retest, I'm not trying to lose money because it's probably going to send me on tilt. So I ended up bringing my stops in profit by about 10 points, losing out on 60 points of the trade and giving all of that money back. And it was at that moment I knew the tilt was on the way, right? So I just backed off. I let the market stop me out. And then the market went through this crazy fuck around and find out moment, right? Where it's like everybody wanted to get long. The market's just effing with everybody's emotions inside of this. And I was just like, nah, I'm cool. I gracefully bowed out from the market. And then I came back later and I took a trade on the S&P. I'll share that with you guys here in a second as we go through the Dow Jones. But ultimately, the reason why I brought this trade up in the first place is not because I netted 200 points, 150 points on the runner, in case y'all forgot. But more importantly is where I fucked up at. Where I fucked up at is I'm a plan trader, right? I trade my pre-market plan. If the market came up here and I wasn't in it to the longs, I could have been validated by looking for shorts on the lower high that was placed at 745. My target on the shorts should have been the low of the PM session, which is the other white box, and or 421. If I didn't take this trade and the market hasn't gotten down here, I have no business being in any trades inside of the middle of this range. Zero business. That is a trade that will forever get me smoked. And even if it doesn't get me smoked, that's a trade that I need to be okay not taking because of the fact that it doesn't fit my pre-market plan. I trade my plan. That's how I remain consistent. That may not work for everybody, but it works for T Hobbs. The fact that I took that trade was a negative, right? And thank God I was able to manage the risk, right? And not take a loss because these are the type of things that send me on tilt. So I'm giving myself an A+ on the day on the previous trade, but an F- on this trade because it should have never been a part of my repertoire whatsoever. All right. But anyway, if we're just continuing to follow time, you see how we trade down into 950, but we look aggressively pushy, like we want to go down further. That's when you just kind of pass on this trade, right? If it's not clear to you what price is trying to do, and you let it just go into the next macro time, or you even let this trade pass up, right? 1025 pushes up. We're still in this downtrend. You know, now the bulls are interested. And this was what Jay Seals kept saying. He was like, nah, I'm hands off until I can see bulls actually come in. By this time, I think everybody just kind of stepped away from the market and just was like, fuck it, we good. Because the sellers were just looking super aggressive, like nothing was holding. But on the Dow Jones specifically, I think that if you traded the Dow Jones, Jay Seals, you probably would have been way more interested on this particular setup because we were in demand. We got the push above structure, right? And then we got that double bottom or that higher low that was placed. I'm not sure yet. We'll review it when I go over to the S&P, but I'm pretty sure the S&P kept selling, right, at some point, but it still got the bounce at 1130, right? Like everybody ended up recovering at around 1130. And again, the market put that higher low in, and I am just of a strong belief, and I've been saying it since the top down analysis. I like the bears showing up, But it's very ironic that they always show up a couple days before Nvidia earnings, and then somehow we get these massive sell-offs only for the bulls to buy it back up. So as far as I'm concerned, I think the bulls are still in control, and I personally think we put the low of the weekend today. So we'll see how it turns out tomorrow, but that's just my personal thesis. If we continue to follow price, like I said, we got that bounce off 1130, started putting higher lows in. 1230 ended up bringing another nice entry. 110 came down. We came all the way down to about 230, which I remember talking to Pip and telling him this. I said, if either I'm going to catch the shorts at 140 or I'm taking the longs at 230. He was like, yeah, I can see that. Y'all know how Pip talk. But right at 230, you can see the market develop right inside of this macro and then just took off, right? Obviously, that's not a macro, Pip. I get it. But we ran the PM session high. The PM session low was placed off the 110, 140 macro, which is usually a very bullish sign when 315, 345 brings the high. This is why I'm not giving up on these bulls, because you cannot count these motherfuckers out. And I just genuinely feel like they setting us up, or they set up a lot of people. They ain't set me up, because I was like, I'm very bullish down here until further notice, right? So let's move over to the S&P 500 and we'll highlight Trading Yoga Girl's plan again. I just really love how detailed her plans have been as of late. And she actually followed this. So shout out to you, girl. But you know, we had our talk about sizing and all that other good stuff, but I'm going to skip through all of this and I'm going to go right to where her plan set up, which was really nice. She was looking, her bearish plan. Where is it? 60-10. Okay. Look for us to reject 6010. Look for the break of the range at 5996, 6006 to target 5991, 5995, and then all the way down to 5950, right? So let's go down to the S&P 500. Yoga, I believe, if I'm not mistaken, she was short 6,006 this morning, right? Which was a great entry. Stops were at 616, right? And we discussed things she did right, things she did wrong. I thought this was a great entry. I was rooting against her because I was actually in the longs on the other instrument. My longs actually ended up working out and her shorts ended up working out. So it was a really good trade either way. The reason why is because we had London highs up here. We had midnight up here. The market failed to take out midnight. And even though it appears that we started off in discount, we were actually creating new premium. And that was prevalent by what happened at midnight, right? At midnight, we took out these lows from Tokyo, right? Once we took out these lows, if we were unable to come back up here and then reclaim the highs, this was actually now premium, right? And these are the little nuances of price that I think we missed today, right? If we were looking to get long, we didn't realize that we were actually in new premium, right? Once the market, Yoga caught it. I did not catch it, right? I missed this structural break because my thought process was 550 brought the low. And I even said it. I was like, I think the low is in London, but structure trumps everything, okay? If the low got broken and this structure did not complete by making a new high above this consolidation, now we're in bearish character. And I think the market knew that it had kind of through one of those little got they ass moments, right? Because I believe gold did the same thing. We're going to go over it here in a second. But that was the little nuance of price that we missed. And the market ended up saying, okay, we're going to fake them out to the upside, give them the 10 o'clock candle, and everybody's going to want to get long right on the break of these lows. I think Justin said he was fighting the FOMO, but he said he was only looking for a quick scalp up here. My black ass was looking for the whole kit and caboodle, and I fafoed, right? Fucked around and found out, right? So it's all good though. Like if we follow price again, we come down here, we skip forward to that 1130 mark. You can see how the deliverance of price was just a little different on the S&P 500 than it was on the Dow Jones. The Dow Jones put this low in at 1025, put a higher low in at 1130, whereas the selling pressure was much stronger on the S&P 500. In fact, they ended up putting that low in at 1025. And I remember Justin said, I want to see these lows get taken. I want to see these lows get taken. I don't know what happened when I left, but the lows definitely got taken right at 1130. And then we put that higher low in right here at 59.30.75, and it was game on, right? It was game on. The one nugget I'll leave you guys with on this instrument and the NASDAQ, pay attention to these weekly projections, right? We're currently down 2.67, 2.64% on a Tuesday at 11:30. Okay, that is bullish. That is not bearish. That is very, very bullish. Okay, especially if this market starts to make new highs. Okay, we've closed down below the CPI candle and we've officially hit our bearish projection for the week on Tuesday. Tuesday usually sets true week. And guess what? 3 p.m. brought a new high. So for all of you bears out there, stand the fuck by. That's all I'm gonna tell you, right? I am a strong believer that if a zebra shows you its stripes, it's a zebra. I've seen these bulls all year. For the last year and a half, no matter how much we sell, they tend to recover. And when I see the market displace almost 3% in 48 hours, it does not make me feel more bearish, especially in the speed in which we came down here. And then they're consolidating down here and holding these levels. So that's just a little food for thought, little nugget, right? But in regards to the trade I took in the afternoon, I took shorts on the S&P 500 at 59.8225. I saw this development here when I was on my walk coming home, and I was low-key upset that I missed the longs. I'm not even gonna cap, right? I was on the phone with Pip, and I was like, I'm so glad I ain't locked my account out, because as soon as I get home, wherever this shit is at, I'm going short or long. It just depends on what time I get home, right? So I seen the dump down here. We got the recovery back up. I got short 59.8225. I caught about 14 points to the downside. I didn't like the delivery of price because I just had a feeling inside of 230 we was probably going to go right back up. So I cut it for 12 points, got out right at 230. I ended up having to leave, but the market ended up pushing right back up when I was getting my salad or whatever. So very clean price action on the S&P 500, but let's go over to gold and talk about that because that boy was a doozy, right? All right. Now, I did not write a plan for gold, but I did not review it yesterday. I wanted to make sure that I took some time to review gold and start, adding it to the repertoire of things that we go over. Because of the fact that there's so many people trading it inside of the Discord, I want to make sure I do my due diligence and make sure you guys have my thought process on it. Not that, you're going to trade my plan. It's just my thought process. Okay. So the big thing with gold, there was a fair value gap on the 4 hour down here at 28.98 through roughly about 2900. The market needed to go close this gap. Now, I told you guys at the beginning of the week, I said I'm still bullish on gold, which I am still, but it is time for this thing to take a little bit of a dirt nap, right? Like it needs to come down a little bit, right? But I'm still very much bullish on gold. My projection for the week, we're about halfway there on a Tuesday, okay? 3.02% was putting us at 28.83. 3.02% from the top of the range was putting us at 28.67. Okay, so we basically came down to that level, but you can see these bulls bought this shit up like swiftly. But let's go down to the 15-minute because I want to talk about a couple things that happened inside of gold that was very, very similar to that of the S&P 500. Down to the 5-minute, actually. I wasn't trying to delete anything. All right, so big thing here, gold. Okay, London, I thought brought the low. But again, this was misleading because Tokyo consolidated up here, right? And up here, the high of Tokyo was way the fuck up here, okay? Way up here. So if you took shorts from Tokyo, you're anticipating more downside if we don't reclaim these highs. Therefore, when you come in during London or New York and you see that we haven't taken the high, you're actually trading the longs into premium, right? But this is a nice little slick way of the market hiding that shit, right? So when this dump happened, right, most people were like, okay, I'm taking longs all the way back up. It's like, yeah, unless we don't take these highs, right? If we don't take out these highs and get back above Tokyo, the market is just setting you up for a kill count, right? And that's exactly what they did on the Dow Jones. Well, mainly on the NASDAQ and ES. The Dow actually went up to the high. The Dow, the S&P and the NASDAQ, they did exactly what gold did. I want you guys to take a picture of this shit, right? Snapshot it because you'll see this again, right? Whenever I see sequences change like this is another little nugget that the market you need to save it in your brain, engrave it in your brain because you will see it again. Because What did the market show you before this? All of this selling, right? But buyers continue to buy it up, buy it up, buy it up. So what was your brain thinking when we got down here? Oh, we at the low, easy money, we going long. That's what I would have been thinking, right? We going all the way back up. But keep it in your mind, structure trumps time, right? Time sets the appointment and something will happen, but it's gonna be happening based off structure. So the development here was the break of structure of the lows, the retest of the highs, another break of structure, a new dealing range was created inside of 930, and now we got the new dealing range and the deal is bearish, right? We're dealing bearish cards. So then it was a straight baptismal. I mean, I think this thing dropped 59 down to, oh my God, this thing dropped 63 points. That's crazy, right? Before finally recovering back up to the weekly fib. Me personally, I would need to see us get back on the other side of the weekly fib before I start looking for shorts again. Otherwise, below the weekly fib, I'd be looking for longs. So we'll see what happens. But they did clear all this liquidity out. We still got this in-wall down below. Gold hasn't sold off healthy. Gold hasn't sold off in a healthy manner in a very long time. So be careful looking for the continuation of the longs, because as the market starts to pump up, sometimes I've noticed in the past, gold has a negative correlation to what the indices are doing, especially when they're about to make a big move. And it looks like tomorrow might be the biggest move that we've seen in a while back to the upside. That being said, that could send gold back to the downside. But those are just my thoughts. It's my thesis. It's how I'm viewing things. That being said, this is the market review. My name is T Hobbs. We'll catch you on the next one, man. Peace.